Clover was established in 1898 as a dairy cooperative in the Mooi River area and is today a major national milk products producer and distributor. It listed on the JSE in December 2010. It has a market cap of 3.2 billion rand, dividend yield of 1.2%, and a price to earnings ratio of 17.7. Paul.
Yeah, it's also a strong producer. I've been less enticed by the Milks brand, but remember they have a fairly significant position now in cold chain distribution for other people. They've expanded and done some new deals in the water area. Looks pretty good. It has had a slightly bumpy trend with regard to earnings, but to be fair, that's what you'd expect from a foods group. I think it's definitely gathering some momentum. You can see how well it's done there.
Certainly on the share price, look at that.
It kind of moved from 10 to 20 Rand a share on the process of the listing. Well, not quite 20, but I mean, you can see there it's done well for people who got involved back in 2010.
And Daniel, Johan Forster has been driving that Cielo Blue project, which is the relocation of their infrastructure away from territories that are actually too far to logistically reach.
Right. So to save on quite a lot of the operational costs. I mean, when they came to market, this was a big driving factor behind it. They are quite a way through that now. So now I think guys are looking through that into something, into more what's beyond the horizon now. What concerns me a bit about this stock, and it actually plays through into some other stocks in the space and really throughout the market, is that guys are taking a sector view and they're saying what's still relatively cheap and let's buy that. So I think what you're seeing is that Clover is now being rated similar to the other food producers, even though the brands, while still good, don't have the same brand equity. They don't have the same brand strength. But guys are looking at the space and saying, well, Clover looks relatively cheaper and it's a brand player, let's buy it. So what worries me about the stock, and you saw it in some of the most recent results, is that because there's not as much brand strength, the company has to reinvest more in these brands to build up the marketing, to build up the shelf space, to get them out there into the market. And that's obviously more expense, and that eats into your bottom line. So I think it's still a good business. I think they've still got good brands, but the brands aren't as good as some of the other players, while the company is being valued the same way.
Paul, did he manage to convince you again?
Yeah, I think that's a great theory, because you're right. You have to be very careful about applying those kinds of views. I mean, having said that, when sectors get a lot of following wind and a lot of enthusiasm, often that is an operationally observed scenario that you do see these share prices going higher. But I don't think we're in that kind of mood or that kind of moment. I think the general mood with regard to consumer confidence is somewhat muted. So now it's going to be a stand and deliver. Show us what you've got. So if the earnings don't come through and rise to the extent expected, then we'll see downward movement on the shares.
Hot or not, Daniel?
So
Clover.
I'd say good brands, but for the valuation that you're paying on that business, I can pay the same valuation for better brands, like for AVL, for example.
Sorry, do you have hot
That's
or not?
So not hot.
Yeah, I'm gonna echo that. So for me, doesn't quite have the same sort of story, and the earnings, as I say, have been a little bit bumpy. We've had good times, bad times, but just a little bit more muted. Not
hot or not?
Not.